Hi and welcome to FinCrime Agent. As part of my financial crime leaders one-to-one sessions, today I have the pleasure of interviewing on FinCrime Agent the head of financial services at Kainos, Dr. Matthew Horsham. With over 10 years of experience working within the financial crime space, Matt will share his view today about technology, the adaptation of COVID-19, cloud, data sharing, and much more. So without further ado, let's start this week's conversation with Matt Horsham. Matt, welcome to FinCrime Agent. How are you today?
I'm good, thanks, Marco, and great to be here. Thank you for inviting me to come and do this. I'm quite excited.
No, it's a pleasure. Thank you for attending this. It's going to be a great interview, and I really look forward to your opinion and to your view about the industry. But before we get started and talk about the industry, could you please share with our viewer maybe something about your background and let us know what you are up to in these days?
Yeah, of course, happy to. So I'm currently at a company called Kainos. We're a cloud engineering specialist. I'm the head of financial services at Kainos, trying to expand our financial services footprint across the UK and Ireland, Central Europe and North America. My background is in the financial services sector, mainly across financial crime and compliance, which I guess is why I'm here. I spent 10 years working with a company that was called Detica, that BAE Systems bought, with various products for detecting and preventing financial crime, both in the fraud space and in compliance. My most recent history is with banking across retail and corporate, but I've also worked in general insurance as well.
Excellent. That's a fantastic range of experience, Matt, and I'm sure we will benefit from your knowledge and experience through the interview. As part of our prior discussion on this topic, I know that significant changes were expected within the industry in kind of the last decade. I'm specifically referring to having a very agile process, for example, or even much faster in implementation timelines by fintechs by these days. However, not entirely sure we actually got there as yet. Within financial crime space, how do you think new technologies are embraced by the financial services sector, and do you think we actually managed to make significant step forwards in the last 10 years?
So I think that question. I think you asked two questions. So I think if you go back and look at market trend analysis documents, you get New Year's a good time, right? Every New Year, you go on LinkedIn, there'll be trends for the next decade, trends for 2021, trends for. If you look at the documents that people were releasing for that in 2010, or even approximately, the things that people were writing then and the things that people are writing now look remarkably similar. So that the challenges that the industry is facing, people are constantly talking about being more adaptable, being able to react faster, being able to move faster, take products to market faster, react to regulation or legislation. So in some senses, if you take those snapshots, it would appear that nothing has changed. And I think that's actually quite an important thing for people to remember and think about, which is that in some senses, you wouldn't expect much to have changed. Banks have been around for hundreds of years, and they basically do the same thing now as they have done for hundreds of years. And insurance companies similarly. Investment houses is slightly different, but still, the core function hasn't changed. That doesn't mean that no progress has been made. I hope.
Yeah.
But I think that there is a tendency to focus on things that have changed. So I think there's lots of material particularly in social media, that suggests criminals are all doing something totally different. And actually, some are, but the vast majority of them are doing exactly the same thing because it still works. They're still doing, the basic money laundering application. They still place the money, then they layer to hide their activity, and then they withdraw the money from the system. That ultimately, if it's still working for them, they'll still do it. And the same thing in compliance, right? If you can hide your identity or hide your structure in a particular way, you'll still do it. Sorry, you look
So
like you were going to say something.
yeah, no, absolutely. I agree with that. So it's a reflection on the banking side that also within the financial crime and compliance, the expectation and ambitions were moving in parallel and haven't changed significantly since, right?
Yeah, I think what has changed then is so the technology always gets bigger and faster,
Yeah,
and I know I've seen a lot of stuff people talking about the decay of Moore's law. We're at the end of that sort of supercompute acceleration, but I think that even with that, there will always be changes in technology that will will rapidly change something. It might be cloud compute. So cloud at the moment has become this technology that allows a scalable compute. You don't have to go and buy your IT infrastructure, but that that allows more more analysis, more. You can surveil everything in a way that perhaps we couldn't 10 years ago. Although
yeah,
I think probably 10 years ago we were saying that about 10 years beforehand. Um, so I think that what the industry can do has changed, and I think that we are better at what we were doing than we were 10 years ago. But I think that criminals are better at it too,
yeah. They
and
move fast,
it's
don't they?
well, it's an arms race, right? And it's always going to be. Every time they come up with something new, we'll come up with something new, and vice versa.
Sure.
But back to the point that we started with, there's a kind of truism in the industry, right? You only catch the dumb ones. People who are really, really good at what they do and really, really smart, you're probably not going to get. And and if you, it doesn't mean we shouldn't try, but
No, definitely.
there's also this thing where you're likely to catch the lower levels. You're unlikely to catch the people at the top because they're so far removed from the actual dirty work on the ground. Which, sorry, that sounds quite depressing. Apologies.
No,
It's
no,
not to
it's
suggest we shouldn't keep
unfortunately,
trying, but I think that's when I'm talking about things not having changed that much. That's some of the reason.
yeah, yeah. So we've been talking about change, and I think another interesting aspect here is the adaptation and resilience that we have seen during 2020 as a consequence of the COVID-19 pandemics, right? Financial institutions and the sector as a whole was somewhat forced to embrace change all of a sudden. I was wondering which area of financial services do you think the pandemic accelerated the adaptation process the most, and how we've been talking about already cloud, which I think could be an interesting area. I don't know if there are other aspects, maybe around regulatory or data sharing, that you think this pandemic, has forced a little bit the hand to move quicker within the industry in the aspect of change.
Yeah, I think COVID. I think it's good. Well, I think people don't know across any sectors. People don't know exactly what the impact of COVID is going to be. We've seen the early shocks and interruptions, and we've seen some of the initial reactions. But I think what that does long term will be very interesting to watch unfold. So what I think it has definitely done is, like you say, it's forced a number of industries that typically struggled with change to make very rapid change, and that's definitely true in the financial services sector. I think we saw the introduction of regulation to help relieve the stresses on the financial markets and on consumers. That was expected to be enacted incredibly quickly if you compare it to historical norms, and that's good because it's what the markets needed, it's what consumers needed, and I think a lot of institutions surprised themselves with the fact that they could make change that fast when they had to. And I think that there's one of two things almost might happen, but in reality will probably fall between them. So one is that COVID will be seen as a shock, a once in a generation type event, and we'll go back to business as usual, right? So take a big institution that has 100 departments across 100 countries, and they had to make these changes very, very quickly. They kind of dropped all of the other things they were working on, partly because of investment contraction because of COVID, but partly because they had this regulatory gun to their head that said, you're going to get this done right now. And that's good that they've done that, but there's this possibility that they say, that's never going to happen again, so I don't need to change. At the other end of the spectrum, there's a possibility that they fully embrace it. That level of change, that level of responsiveness is good. It could be a real market differentiator and competitor, to outdo the competition, attract or retain customers, and they could fully embrace it and go, become this much more agile institution. And if you're talking about big multinational banks or even big national scale insurers or sort of tier 2 banks, that's a really hard challenge. If you employ thousands of people, it's not easy to be agile. And I think often the conversation suggests that it is. So actually, I think what will happen is somewhere between the two. And I'm hoping that we as technologists in financial crime and in financial services can encourage people to embrace the best bits of it. So you mentioned cloud. I think cloud and the associated sort of DevOps tools and mindsets can really actually make a difference there. And I think one of the big things that will come out of it, or can come out of it, as a positive, is that adoption of that mindset, that you can effectively you can be a bit more experimental and try more things, because the cost of failure is lower. You don't need to buy a massive rack of servers and wait 6 months for them to get stood up and plugged in and tested. And you can go on to a cloud provider and buy that environment right the second. You can do it in minutes. Try out your little bit of
expand and reduce according.
Exactly, and then you can try something and you can say, "Oh, that didn't work," and shut it down, and it didn't cost you very much at all, maybe $100, right? And that's great. And hopefully, what that will mean is that people will try to do things faster and try more things out, even in the hyperscale financial institutions, because you can try it at a small scale. And I think what that will do is hopefully free up the investment mindset. So if I come to you and I say, I've got this change program, Marco, that I've got this idea for, I'm going to need 100 million over the next 5 years. You might go, that's a big bet. But if I come to you and I say, can I have 100,000 for the next 3 months, or 100,000 for the next 1 month? And if it works, then I'm going to want another 500,000. And if that works, then I'm going to want. You're much more likely to actually be able to do it. So I'm hopeful that that's the change that we will see stick from COVID. From a financial crime perspective, so I think regulators have this constant balance to find, where what they want is they want to push the industry as hard as they can to do the best it can, but they don't want to set impossible goals. So I use a speed limit analogy. If you have a road that's long and straight and everyone can see for miles on it, but there've been some nasty crashes and you want to reduce the speed, if you set the speed limit at 30 miles an hour, nobody will pay attention. It's clearly not a road that needs a 30 mile an hour speed limit. No one's going to do it. If you set the speed limit at 50 miles an hour, people might do it. And the regulators kind of have that battle to fight all the time. They want to set the lowest speed limit they can, but they have to set a speed limit that anyone's going to bother listening to, and that can be achieved. And I think what COVID has done is show that big institutions can move fast, and regulators have learned that, they've seen that. So I think the regulators will continue to pressure people to move quickly now, because they'll say, well, you did it with COVID, you can do it. Why can't you do it now? And I think that it will be interesting to see how that settles.
Yeah. Do you have anything maybe to say on the data sharing side? Do you think that was also part of this picture with the change?
Interesting. So I just give a little background. So data sharing, particularly in financial crime, has been something that's been talked about for quite a long time. Yes. So there've been there are various industry bodies that allow it to a certain extent. So multiple insurers buy into a sort of national industry body. There's definitely one in the UK. There's one in I'm not sure if it's in Canada or the province of Ontario, where you can share a level of data that helps to prevent organised crime, basically, because the criminals don't mind which insurance company they're stealing money from. They're happy to take it from anybody and everybody. They also don't know who they're stealing money from sometimes, because if I decide to crash into you, I don't know who you're insured with until after I've done it. So there is an appetite to do it. In banking, it's been a bit more complex, partly because there's a much more it's a much more compliance heavy industry. There is an expectation that banks will disclose risk, particularly of criminal behaviour, to the regulator. And in some senses, what that does is move the responsibility, just the emotional responsibility that people feel, to the regulator. But what you end up with is that the regulator ends up with being the single repository where data from multiple banks comes together, and they're inundated with this vast quantity of data, and the majority of it, because of the way regulation works, isn't of value to criminal investigation. So the banks have filed just in case. You get this just in case filing problem. So there are various, in various countries, there are initiatives to try and circumvent that, to allow the industry to share knowledge more directly. And at one end of the spectrum, you've got the insurance. I'm an insurance analyst, and I've got this thing where Marco's come and crashed his car, and it looks a bit dodgy. And I literally phone my mates at other insurance companies and say, have you heard of this Marco Berenzoni chap? Now, I'm pretty sure it's not okay within various legal frameworks like GDPR, but it's a vocal conversation on the telephone, so at the moment people aren't that bothered. But there is I think there's a genuine move to allow the right level of data sharing, to keep the consumer protected within frameworks like GDPR, but to share the relevant details. And I think there's one of two frameworks that will fall out of that. One is where the data is shared anonymously, and in order to get below the anonymous layer, you'll need the equivalent of a warrant, or maybe it will be a warrant. So there'll be this nasty collusion between Marco and Matt across multiple banks or insurance companies or other financial institutions. You'll be able to put us in as customer numbers or something anonymous that doesn't allow identification of us personally. You'll get to the point where it's pretty obviously nasty behaviour, and then you'll go to the regulator or whoever it is and say, can we get under the skin of this and see? I think that the blockers to that at the moment is the speed of doing that. Mm-hmm. So the amount, you have to be so suspicious of the activity to keep the volumes low enough to do that. And banks aren't really investigatory bodies. They're not set up to do that. Insurance companies a little bit more. The claims fraud and insurance, there's a bit more of that set up. But I think it's easy to think of them as like a detective on TV, like CSI Insurance, and it isn't like that, right? The real world doesn't work like that. So that's one end. The other end is potentially that you have almost an automated version of that, run by regulatory bodies or legislative bodies, where they dictate that the data will be shared, and then they have a rule set that once it crosses a certain threshold, then it will be allowed to be exposed or be automatically filed with law enforcement. And I think the blocker to that is, or has been so far, the technology choice. So there have been a number of conversations about various different technologies. Homomorphic encryption is an example that might allow this kind of data sharing at an anonymous level that still allows the detection. But the problem is the national, whether it's the regulator or the law enforcement agency, whoever it is, they aren't in a position to go to corporations and tell them you have to buy the following piece of software. So I think that's a bigger challenge to overcome. But I know there are a lot of activities and efforts to help break that down. So Gimlet in the UK is definitely working to do the right type of data sharing to help prevent money laundering and financial crime. But it's a very difficult battle, right? It's a really difficult thing to do. Do I think COVID has changed that? I'm not sure is the answer. I think maybe not specifically. If it has, it's through financial vulnerability. So one of the things that we did well in COVID was identify and then try to look after people who were in financial difficulty because of the virus, because the level of work they had was reduced, or even the industry they were in effectively shut down, and they weren't earning. And we had there was no structural reason for that part of the economy to fall away. It was the shock of COVID. So there wasn't a sort of natural market forces to provide alternate income and alternate market sectors for people to move into. And we did well at that. And I think maybe there was some data sharing around that could be used as a model. But I think ultimately we'll come back to the same problem, which is that fortunately criminals are a tiny fraction of the population, and we want to ensure that we protect the 99.9% of people to the right level and not sell them out in order to catch the tiny fraction who are doing bad things.
With that, Matt, we got to the end of our discussion today. I want to thank you for coming to speak at Fin Crime Agent. It was a great pleasure to have you on my channel, and I hope we can chat again in the near future with more insights and industry updates from your end.
Oh, thank you very much for having me. I really enjoyed myself, and it's great to have been invited. I'm flattered.
A great pleasure. If that's okay with you, I will leave your LinkedIn profile in the description of my video in case anyone wishes to get in touch with you directly. So thank you one more time, and thank you all for watching. Until next time, see you soon.